What's going on, everyone? Thanks for tuning back in. Let's get right into the whole deal. I'm looking through silver's stacking videos in the last month, and there's some doom and gloom. Obviously, there's some price manipulation. There's all kinds of scary stories in the silver community, but that's nothing new. We've already seen all that kind of stuff. But let's recap from last video. So last video, I've been tracking four major things. That's the SLV. Year to date, it is down negative 5.2%. I was comparing it to the last video, so check this out. Let's start with spot price. Spot price is down $1.20 since my last video, which was about a month and a week ago. A-Mark Precious Metals is down 55 cents since the last video. S&P 500 is up 192.5 points. So S&P is outpacing everyone again, and the SLV is down $1.20 per share since my last video. So year to date, it's in the negative. S&P 500 is in the positive, over 13%, and A-Mark Precious Metals is up about 5% positive year to date. And then silver's spot price is down negative 4 points. So another thing that we covered was the cheapest coin. I'm using APMEX just because APMEX is the largest bullion dealer around in the United States. I believe they do more trading than a lot of the other online bullion dealers, SD Bullion, JM Bullion, Provident Metals, Bold, Hero, wherever you go to, APMEX is pretty much the larger online supplier. Now, A-Mark is by far the biggest bullion wholesaler out of the United States. They have so many different subsidiaries underneath them. We've all already kind of understand how big they are, but that's why I use APMEX. So if you're like, hey, wait a minute, don't be using APMEX, they're the most expensive. This gives me a consistent read on spot price and premiums. So I talked about spot price going down $1.09 since my last video. It's been a month and a week, and interestingly enough, I checked the price on the Britannia in the last video, and the difference in it today is 59 cents. The premium went down 59 cents, although spot price dumped $1.09. So that's crazy. You talk about buy the dip because it dipped. Premiums aren't premiums are not going away. So as long as everyone keeps hyping buy the dip, those premiums continue to climb. We've already seen countless videos about premium. What you should understand as far as anything is that premium is always there when you buy, never when you sell. It goes away when you sell because the majority of people who are selling force that to happen. When an influx of people come in, because the spot price goes up, the local coin shops will not pay you any spot. Usually they'll give you, they won't give you any premium for it. So you lose that premium. I think it's been documented in countless videos. I know I actually made a comment on one of Silver Seeker's videos when he called local coin shops, and they give you the excuse, oh well, everyone's coming in, I have too much inventory. The thing that I can pay you right now is spot price, maybe $1 over, or it might be under, depending on what kind of bullion you have. So just be wary of that. Spot price, taxes, and shipping kill your overall gains, especially if you're in this as a buy and hold investor kind of person. That's my kind of investing. I like it. I do not trade. I don't buy and sell, list them on eBay, flip coins, none of that. It takes too much time out of my day. A lot of people will say, will disagree, but to me, am a stacker. Stacker just buys with their income, and that's it. They buy and hold. That's it. That's all they do. Ever, they don't, flip to lower their dollar cost average. They don't do any of that. To me, that's a silver merchant. But everyone's entitled to do whatever they want. It's their money. It's their motive for stacking. That's what's beautiful about it. There's so many different ways to stack silver and gold. So moving right along, the S&P is killing everything. We expect a pullback, so we've seen it in the last couple of weeks. Actually, in the last 2 weeks, I think we've seen the pullback. It was as high as 16%. Now it's back down, trading around 13% year to date. So I'm looking right here at this, and you can see it in the graph. It was up here. It peaked, it had a 52-week high, and now we're trailing down. So what can we expect looking forward? Obviously, if the S&P, let me pull this down a little bit more because I'm looking at the 52-week low is at 34. That's where it started from. Now, January was an awesome time to be buying stocks. A lot of stocks were at the lowest. And then we had another pullback in March. So there's been since the beginning of the year, there's been two buying opportunities in my book. That's what I'm looking at. That's when you dollar cost average. That's when you go back and buy whatever you want. And then this other time where it's just running, from, if you put it into time perspective, look at March the 13th all the way till June. So April, May, and June. So 3 months of just positive gains in the S&P. If you guys dollar cost average, I was looking and I commented on another video. It was a person who does FIRE, which is an amazing thing. It's an amazing feat if you can get to it. It stands for financial independency, retire early. So what people who are FIRE people do is they save about 90% of their check, and they're trying to retire as early as possible. It's an amazing feat if you can get to it. I salute everyone who tries, because that is very hard to do. You have to be extremely disciplined. But this person's putting into a S&P 500, and they talk about, their video was them being discouraged and wanting to quit, because as they were putting in money, along this, right? As it's going up, you're putting in dollar cost averaging, and you're paying a little bit more each time. So what happens is when you get to the peak and now it starts to trail back down, all the money that you were putting in starts to get lost. So as you're putting it in, you get, this deja vu weekly or bi-weekly or monthly of just losing money. The money that you just put in, now it's down even more. And so you get frustrated, and this person kind of expressed that they want to quit, they want to stop putting in money. But what I was trying to create was just an idea. What I do, and this just goes in my strategy, it's not like I'm a billionaire or a millionaire, so I can't see if it works or not. But my portfolio has it's limited on how much I'm down. I'm usually never down more than 4%. And during those times, that's when I take the opportunity to dollar cost average. So what my theory is that as it's low, you start to dollar cost average. And if it starts to run, you stop. You still continue to put your money into the brokerage account, but not spend it. And when you have these down days where it's more than 8%, you're just looking at this, on a day where the last 5 days it's down 1%. So right now, if you were dollar cost averaging in the S&P, you would be putting it in right now, right? But it also depends on your point of entry. So year to date, if you got in here at the peak, then anything that you start to put in is going to dollar cost average down. But if you got in here and you started to put in money, it's just getting more expensive to buy. What you would do is just hold off, let that money sit in the account, and just wait. If it's above 8%, you don't want to put it in, because you don't want to buy more shares, because it's just more expensive. So you're looking for these pullbacks. And right now, for 6 months, there's only been 2 buying opportunities in my book, right? One right here in January and one right here in March. So it's a little bit more tedious, because it's technically is timing the market, but you're basing it off the percentage of how much the market's gonna run. So for the entire year, we can expect an 8 to 9% return. So anything underneath that is when you want to dollar cost average. Anything above it, you want to pull back and set that money aside. So when you do have a big buying opportunity, that's when you kind of execute those buys. So it's I wish I'll do it later in a video when I start to buy more S&P 500. I bought in at I can't remember exactly where I bought in, but I'll explain it in a different video. But that's pretty much the recap, guys. S&P 500 is doing extremely well. The AMARK stock and the SLV stock. AMARK is still doing well, above 5%. Like I said, AMARK, I mentioned this so many times in my video, because as a silver stacker, if you guys are buying bullion, it's in your favor to hold AMARK precious metals in your portfolio. Now, the thing is, in the last 2 years, it has skyrocketed. You know, if you were buying A-Mark back in 2018 like you were buying silver, you would have done extremely well in the past 5 years. Look at the amount in the past 5 years. It's gained 448%. It's a $29.54 per share increase. Now, those are amazing gains. For every ounce of silver that I bought in 2018, it's maybe up $5 per ounce. So, you know, that's something to look at. If you're a silver stacker, A-Mark Precious Metals is not going anywhere. They are a gigantic bullion wholesaler. They're in, again, they do so much business. It's amazing how much business they do. I had gone on Bullion Now, which is our friends down under in Australia. They even deal with A-Mark Precious Metals. So again, got they just acquired the Silver Gold Bull over in Canada, so they are expanding tremendously. And then the dividend that they paid out, I explained in the last video. The CEO, he got nearly paid $5-6 million just in dividends alone, leading up to 2022. So it's been amazing. What a phenomenal business to be in. If you can get this, now the only issue that I have right now is trying to get in at a good price, because I know that this is overvalued. It's had its dips. It got down to $25. It's back up to 36 because of so much movement in the community, right? When people start to, you know, start to put fear in the community, people run out and buy bullion. They buy it at expensive prices, overvalued prices. Premiums are $7-8. This is the company that profits the most off it. So again, if you're a stacker, to me it just makes sense to be buying A-Mark Precious Metals. The only thing is now it's just too overpriced, and now I'm looking for a fair price to get back in. It's gone down as far as $25. I'm expecting to jump back in below that. I may have to wait this out maybe a couple more years before I get in, but it's always in the back of my mind. 52-week lows at 23, anywhere near that, you can start to buy and then dollar cost average if it goes down, and then hold if it goes up. Check out A-Mark Precious Metals when you guys have your own time. See where you're going to jump in. Now, SLV is this is the digital Buffalo generic round in my book. So when you want to profit off the spread of or the volatility of the silver spot price, this is what you buy at. You're buying this because it's backed by physical silver, and to liquidate this is extremely easy. I got in at $16. I only bought it was a marker. I explained in the last video what it was, and I sold it nearly at $24. That's the low and the high. And had I bought more shares, I could have increased gains. But again, this is so much easier to liquidate than physical silver. You can do it at the convenience of your cell phone. So if you're using any brokerage, I know that Robinhood has been by far the easiest platform to use. You can buy it on Robinhood, SLV, and you know, take those profits whenever you can. So looking to buy back into this. Again, this is like the generic Buffalo that we all buy and we sell later on when the price is running, and we get that. So we don't get gypped on the premium. We don't get gypped on anything. This is you can sell directly at the price that you want. You can set a limit price. You can sell at market, and you liquidate it fast. You get your money in a couple of days. Believe me, if you are buying and flipping, look more into SLV because it's much easier. As silver stackers, I want to push that because I don't hear a whole lot of conversation about SLV or buying the SLV to take profits when spot price is volatile. Right now, it's -5%. It's still a good buy right now, considering that it was at 22.05. Again, I got in at 16. That's what I'm waiting for. Anything below, you know, 17, I'll start to dollar cost average. The only thing is that at 17 per share, it's gonna, you know, to get 100 shares is gonna cost you, you know, $1,700. So it is, you know, you need a little bit more capital. But to me, it's cheaper than the ounce, right? Right now, an ounce is $28, I believe, right? $29 if you buy 1 to 24 ounces of a coin. This one is $20.90. So it's, You know, you don't have to deal with premiums, you don't have to deal with taxes, any of that. Well, taxes you do have to deal with at the end of the year when you take profits. It gets added into your income, and if you're in the income tax brackets, that's where you're going to be paying on taxes. Or you can just buy and hold and save this as well. It doesn't really matter. But when you talk about you know, physically having so much silver that you put in different places, this is all in the power of a brokerage. It's, you know, it's held in your hand through your cell phone, as easy as you can liquidate. So think about that. And I think that's pretty much it. That's all I wanted to cover. Oh, one other thing that I wanted to see. So this is funny. In the beginning of the year, everyone was scared about the banks, right? We saw so much videos on YouTube talking about banks collapsing. I saw a video with Peter Lynch talking about back in 08, 400 some odd banks collapsed. There was no issue, you know, life goes on. All the banks are still here. Well, it's funny because in those couple of months that the banks collapsed, that's not funny, but the banks collapsed. Everyone got scared, pulled their money out. Now, what is the new trend that's happening? Everyone's rushing to put their money back into high yield savings accounts. So it went from I'm scared, I'm pulling my money, to here, take my money because you're going to give me 4.5 points on every dollar that I put in. It's kind of crazy how the world works, but it also goes to show you the people who you know, are easily manipulated or influenced. Those are the people that go back and, hey, I'll give you all of my money now because you're going to give me 4.5 points on the dollar. So it's just kind of weird the way stuff works out. Russia is the other topic that I kind of wanted to talk about, how it's going to influence the gold and silver price. Gold looks like it's still running. It looks like it's on its way up past 2,000. I never really bought gold because of the price of gold. Now, a lot of people say, well, just buy smaller golds. I'd much rather get an ounce, but I'm not there yet financially to be buying, you know, spending $2,000 on a gold coin right now. So silver has always been more affordable, and I think that's why a lot more people stack it. I guess, you know, that's just, you know, common sense. But so I don't really mess with a whole lot of gold, is what I'm trying to get at. So I focus myself on silver as much as I can. Again, I've stopped buying. It's been a couple of years since I bought consistently. Throughout the last 2 years, I bought occasionally some things that I kind of liked. And those weren't purchases that are strategic, that you're stacking. Those were more like, you know, more like as a luxury for me to buy those things. So that's pretty much all I wanted to talk about. I hope everyone's doing well. You know, let me know what your thoughts are about stacking SLV and stacking A-Mark precious metals in the comments below. Happy blessings, happy stacking, guys.